What is insurance? Most people have some kind of insurance for their car, their house, or even their life. Yet most of us don't stop to think too much about what insurance is or how it works. Put simply, insurance is a contract, represented by a policy, in which a policyholder receives financial protection or reimbursement against losses from an insurance company. The company pools clients' risks to make payments more affordable for the insured. Insurance policies are used to hedge against the risk of financial losses, both big and small, that may result from damage to the insured or their property, or from liability for damage or injury caused to a third party. Insurance types. Key takeaways. 1. Insurance is a contract, policy, in which an insurer indemnifies another against losses from specific contingencies or perils. 2. There are many types of insurance policies. Life, health, homeowners, and auto are the most common forms of insurance. 3. The core components that make up most insurance policies are the deductible, policy limit, and premium. Life insurance. Life insurance is a contract between an insurer and a policy owner. A life insurance policy guarantees that the insurer pays a sum of money to named beneficiaries when the insured dies in exchange for the premiums paid by the policyholder during their lifetime. Health insurance. With regard to health insurance, people who have chronic health issues or need regular medical attention should look for policies with lower deductibles. Though the annual premium is higher than a comparable policy with a higher deductible, less expensive access to medical care throughout the year may be worth the trade-off. Auto insurance. Homeowners insurance, also known as home insurance, protects your home and possessions against damage or theft. Virtually all mortgage companies require borrowers to have insurance coverage for the full or fair value of a property, usually the purchase price, and won't make a loan or finance a residential real estate transaction without proof of it. When you buy or lease a car, it's important to protect that investment. Getting auto insurance can offer reassurance in case you're involved in an accident or the vehicle is stolen, vandalized, or damaged by a natural disaster. Instead of paying out of pocket for auto accidents, people pay annual premiums to an auto insurance company. The company then pays all or most of the costs associated with an auto accident or other vehicle damage.
What is insurance? Insurance is a way to manage your risk. When you buy insurance, you purchase protection against unexpected financial losses. The insurance company pays you or someone you choose if something bad happens to you. If you have no insurance and an accident happens, you may be responsible for all related costs. Having the right insurance for the risks you may face can make a big difference in your life. People get insurance not only to help with risks from unexpected events, but also to help pay for routine things, such as annual medical checkups and dental visits. In addition, insurance companies negotiate discounts with healthcare providers, so their customers pay those discounted rates. An insurance policy is a written contract between the policyholder, the person or company that gets the policy, and the insurer, the insurance company. The policyholder is not necessarily the insured. An individual or company may get an insurance policy, making them the policyholder, that protects another person or entity, who is the insured. For example, when a company buys life insurance for an employee, the employee is the insured and the company is the policyholder. How does insurance reduce your financial risk? Imagine you're driving your car and you hit a deer, which damages your car. If you have the right kind of auto insurance policy, the insurance company will pay the costs of the car repairs, minus the deductible, the portion you have to pay. Now, imagine a water pipe bursts in your bathroom, ruining everything in that room and in the bedroom next to it. Typically, if you have homeowners or renters insurance, the insurance company will pay to replace some or all of the damaged property once you pay your deductible. Insurance policies will only pay for things that are described in the policy. So it's important to read a policy carefully before you buy it so you'll know exactly what's covered. How does an insurance policy work? Insurance policies are often in place for a specific period of time. This can be referred to as the policy term. At the end of that term, you need to renew the policy or buy a new one. With some types of insurance, you choose a beneficiary, the person you want to receive the policy's benefits or payments. When you buy an insurance policy, part of your responsibility includes paying a fee called a premium. Some premiums are paid monthly, like health insurance. Others may be paid once or twice a year, like auto or homeowners insurance. The cost of your premium generally depends on how much of a risk you are to the insurance company. In addition to the premiums, most insurance policies include a deductible. That's the amount you have to pay first before the insurance company pays their share. For example, if you have a $500 deductible on your homeowner's policy and a storm causes $3,000 in damage, you will pay $500 and your insurance company will pay $2,500. With some policies, you can choose your deductible. Usually, a higher deductible means a lower insurance premium. Tip: a good rule to live by is to try to have an emergency savings fund to cover the cost of a deductible should an accident occur. What are common types of insurance? There are many types of insurance, but some common types are described here. Health insurance helps you pay for doctor fees and sometimes prescription drugs. Once you buy health insurance coverage, you and your health insurer each agree to pay a part of your medical expenses, usually a certain dollar amount or percentage of the expenses. Life insurance pays a beneficiary. You select a set amount of money if or when you die. The money from your life insurance policy can help your family pay bills and cover living expenses. There are different types of life insurance. One is term life insurance, which pays a benefit only if the insured person dies during the term of the policy, usually from 1 to 30 years. Another is whole life insurance, which pays a benefit whenever the insured person dies. Disability insurance protects individuals and their families from financial hardship when illness or injury prevents them from earning a living. Many employers offer some form of disability coverage to employees, or you can buy an individual disability insurance policy. Auto insurance protects you from paying the full cost for vehicle repairs and medical expenses due to a collision. In most states, the law requires you to have auto insurance when operating a motor vehicle. Homeowners or renters insurance covers your home and the personal belongings inside in the event of loss or theft, helps pay for repairs and replacement. If you have a mortgage on your property, most lenders require you to have homeowners insurance. What should you consider when buying an insurance policy? A useful rule to live by is to do your homework before you buy insurance. Research any insurance company you're thinking about buying from to be sure that the company is financially sound and provides good service. Also find out what factors matter so that you can get the coverage you need.
What is auto insurance? Basic personal auto insurance is mandated by most states and provides you with some financial protection in case of an accident. But is it enough? What are the options? Learn how car insurance works and what types of coverage are available. Understanding auto insurance: the basics. Auto insurance is a contract between you and the insurance company that protects you against financial loss in the event of an accident or theft. In exchange for your paying a premium, the insurance company agrees to pay your losses as outlined in your policy. Auto insurance provides coverage for property, liability, medical. Auto insurance provides coverage for liability, your legal responsibility to others for bodily injury or property damage, medical, the cost of treating injuries, rehabilitation, and sometimes lost wages and funeral expenses. Basic personal auto insurance is mandated by most U.S. states, and laws vary. Auto insurance coverages are priced individually, a la carte, to let you customize coverage amounts to suit your exact needs and budget. Policies are generally issued for 6-month or 1-year time frames and are renewable. The insurance company sends a notice when it's time to renew the policy and pay your premium. Who is covered by my auto insurance and under what circumstances? Your auto policy will cover you and other family members on your policy, whether driving your car or someone else's car, with their permission. Your policy also provides coverage if someone who is not on your policy is driving your car with your consent. Your personal auto policy only covers personal driving, whether you're commuting to work, running errands, or taking a trip. It will not provide coverage if you use your car for commercial purposes, for instance, if you deliver pizzas. Now offering supplemental insurance products at additional cost that extend coverage for vehicle owners providing ride-sharing services. What is auto insurance coverage mandatory? Auto insurance requirements vary from state to state. If you're financing a car, your lender may also have its own requirements. Nearly every state requires car owners to carry bodily injury liability. Bodily injury liability, which covers costs associated with injuries or death that you or another driver causes while driving your car. Liability, which reimburses others for damage that you or another driver operating your car causes to another vehicle or other property, such as a fence, building, or utility pole. Medical payments or personal injury protection, the PIP, which provides reimbursement for medical expenses for injuries to you or your passengers. It will also cover lost wages and other related expenses. Uninsured motorist coverage reimburses you when an accident is caused by a driver who does not have auto insurance or in the case of a hit and run. You can also purchase underinsured motorist coverage, which will cover costs when another driver lacks adequate coverage to pay the costs of a serious accident. Even if PIP and uninsured motorist coverage are optional in your state, consider adding them to your policy for greater financial protection. While most basic, legally mandated auto insurance covers the damage your car causes, it does not cover damage to your own car. To cover your own car, you should consider these optional coverages. Collision, comprehensive, glass coverage. Collision and comprehensive only cover the market value of your car, not what you paid for it, and new cars depreciate quickly. If your car is totaled or stolen, there may be a gap between what you owe on the vehicle and your insurance coverage. To cover this, you may want to look into purchasing gap insurance ADTION to pay the difference. Note that for leased vehicles, gap coverage is usually rolled into your lease payments.